entertained? Are you not entertained? Is this not why you are here?
Hey there, hope all is well. Wanted to connect for a little bit and share with you some things that's on my mind in reference to three particular areas that I think really needs to be paid attention to at this current moment, given all the news that's happening right now, and especially this political climate that we're in, where we're going to see a lot more volatility in the markets. But it's good to just focus on what's key. And so what we're going to do this morning, I'm going to share with you some thoughts and get your take on it, of course. And as always, the goal is to just provide information that really get your wheels turning, get you thinking about what's really happening and what's really at stake here. Because at the end of the day, what we're witnessing in the real world is not necessarily a political thing or a societal issue. At the core essence of it, it's a monetary thing. And so it's definitely worth paying attention to as we move forward. So there's three particular things I want to really focus on this morning. Of course, get your thoughts on everything. But at the core of everything, it's really about keeping your eye on the main subject matter and not being distracted by all the things that's going to come over the next couple of weeks and months. So that's the goal with this check-in this morning. But, sweet and simple. In a world where financial markets seem like a roller coaster ride, it's easy to get caught up in focusing on the highs and lows. But beneath the foundation of our economy is showing some serious cracks. Asset bubbles, mountains of debt, and shaky financial policies are all coming to a head. And if you think the economy is on solid ground, then you need to think again. The reality is much more complicated and much more concerning, if I might add. And so one of the main things really we're focused on is the massive asset bubble, which is a ticking time bomb, in my opinion. And that is one of the big elephants in the room that not many people are really focusing on. You see, the massive asset bubbles that's been building for years, including stocks and credit markets, have been inflated to an unsustainable level. This illusion of wealth has been propped up by artificial means, which is mainly through an overabundance of cheap currency and loose credit. Yet, like all these bubbles, this one is destined to burst because the system has been flooded with excesses, and it's only a matter of time before these imbalances need to be corrected. And when that happens, it will not be pretty, let me tell you. As I mentioned, debt. How can we not talk about debt? Everyone's saturated in debt. We got all-time high in credit card usage. We got all-time high in national sovereign debt. And it's unfortunate that systems don't run unless there is more debt. And ultimately speaking, our economy's foundation is extremely weak because our economy has become overly dependent upon debt. All the way from corporate borrowing to personal loan, the reliance on debt has reached dangerous levels. The Federal Reserve balance sheet ballooned by $5 trillion from 2020 to 2022, and the M2 money supply increased by $6 trillion as a result of the whole health situation that we all dealt with. And then when you think about it, these numbers are almost impossible to actually comprehend. This massive influx of liquidity into the financial system created an illusion of prosperity. And so as I always say, as long as everybody look at their screen and their credit card and their balances go up, it makes them feel like they're wealthy. But it's not too often they consider what happens when it goes down the other way. Will they still have that same level of energy? So the main point to get across right now is that this whole illusion of prosperity is simply just a house of cards is waiting to come down. And sooner or later, the debt will have to be reckoned with, and the fallout could be severe. So clearly, we are approaching the calm before the storm, in my opinion. Wall Street might want to paint a rosy picture with some sectors like tech showing strong returns, but that's not the full story. The broader market, including critical sectors like regional banking, is struggling. The U.S. economy is barely growing, and the official inflation numbers don't tell the whole truth, because we know we can't trust the government's figures. And so while the government reports inflation is down to 3% from a peak of 9%, alternative calculations such as John Williams Statostats suggest it was high as 18 to 26% at the peak of the inflation bubble during 2021. And so clearly the economy is really not growing at all. And if it is, it's at a snail's pace. So the expected revenue and earnings growth simply isn't there. And what makes it even more funny is that Wall Street's expectations or projections of 14% earnings growth for next year are simply overly optimistic, to say the least. And so as you sit back and you look at all the stuff I just mentioned right now, the layers of the economic facade, it's clear that the foundation is far from stable. Between the massive asset debt, the massive asset bubble, the mountains of debt, the misleading indicators, they all point to the fact that the system's in big trouble. What's becoming clearly obvious is that we're on the brink of something that will be historical in nature. It will definitely shake up the investing landscape for the rest of this decade, in my opinion. So the next time someone tells you that the economy is doing fine, just remember these underlying issues we talked about. And unfortunately, they're not going away anytime soon. And so you might say, so what's the solution? Clearly, the solution is to recognize that you're being lied to, and that in the midst of all this chaos, there's no one or no entity that's coming to save you. So it's all on you. So it's up to you to actually take steps needed to protect and preserve everything that you work hard for. And of course, the most obvious way is to just look at history. These events that we're experiencing now, there's nothing new. And so it's either you're going to be proactive or you're going to be reactive. And being proactive simply means figuring out a strategy that works best for you and your household that allows you to protect, preserve, and to prosper in this monetary shift that we're experiencing. And when it comes to protection, one of the key ways you can protect yourself is simply precious metals. Have an allocation to the side as a form of currency inflation insurance is one way that can protect you, worst case scenarios, and on top of that, provides a sense of comfort and liquidity if something was to go wrong. You can have things that you can use for emergency spending and things of that nature. And then when it comes to preserving, you're thinking about long-term holdings, and that's where you have a separate stash of assets that you will not touch in the short term. That's designed to be passed on to your kids' kids if need be. And that can be an assortment of things, all the way from artwork, if that's something you value, larger holdings of metals, collector's items, you name it. And this could be a variety of things depending on what you're focused on. And then when it comes to prospering off of this, looking at things that are undervalued right now that you can grab a hold of that will probably reap some of the benefits of all this liquidity that's going to be created once this next crash happens. And of course, that can include cryptocurrency, the mining space, as well as being able to invest in some of the tech startup things that might come about as well, because we're definitely in a AI robotics boom that's going to be coming as a result of all these things. So these are just some ideas on things that you can use to try to prosper and to protect and preserve yourself. But as always, curious to hear what you guys think. If you find this informative, hit that thumbs up button. Take the time, share this so your family and friends can know what's going on. And of course, I look forward to seeing you in the next episode. Catch you later.